It's good morning. Welcome to BDO's fourth webinar in our COVID-19 series. My name is Andrew Fielding, and I have Alastair Raphael with me. Good morning, everyone. Okay, there we go. I'm a partner in the advisory section of BDO, and Alastair's an associate director in the advisory section, where we look after business restructuring, etc. So today we're going to talk about dealing with COVID-19 and what's next. The way BDO's approached this, we've developed a model that we have put the phases of the COVID-19 together. We've all been through the react phase, where we've all been trying to safeguard the businesses, batten down the hatches, make sure the staff are safe, make sure cash flow is good. And I guess in the last couple of weeks, we've all been in that resilience period where we've been trying to just keep our businesses running while we work out what the new norm is. And I guess where we're at now is we're moving further towards the realised section of our model, which is returning to work and how to succeed in the new normal as we see it. I guess the big question for us, though, is what is the new normal? What is it going to look like? There are a number of, all of us will have looked at the paper and we will have seen every expert has a graph or an expectation as to what the new normal is going to look like. Ultimately, the speed and strength of the global economy is going to be dependent upon economic policies, etc., and medical advice. But I guess there's some things that we can be pretty certain of, that the demand for goods and services will be unpredictable. It'll trickle in. It may not be directly related to policy. A lot of people will have their own ideas on how to deal with things. I mean, a perfect example of that is, my view, RSL clubs and things like that, where you have an aged population. Notwithstanding the government lifting the number restrictions, my expectation is that there will be fewer of the aged population want to go to those clubs because there will be a paranoia of the COVID. Same thing with public transport and so forth. So it's going to be hard to determine how quickly demand will pick up. And I guess in that case, capital, we believe that most businesses are going to require a fair bit of working capital to open the doors again. Most restaurants, hotels, etc., are going to have to restock. They'll have to restock their perishables, etc. And they'll also be punting as to what employees they're going to need. So they may need to fund wages. The JobKeeper subsidy finishes at the end of September. So moving forward from there, it's going to be a bit of a punt as to how many staff you need on, whether you're going to actually be able to cover those. So I believe there's going to be a great need for capital. Creditors will be looking for payment of their outstanding accounts. We've already experienced a number of clients who have advised that they're now trading on a COD basis, which makes it very difficult, particularly where they're not on site. So if goods are arriving, they're having to rely on staff to deal with cash, which people are fairly reluctant to deal with. There's going to be an issue with respect to the viability of customers and suppliers. So, are you going to deliver that order? Is that customer going to be able to pay for that? Are they going to be around in 6 months' time? And the same deal with your suppliers. You've got issues as to whether your supply chain is solid. I mean, if you're a building contractor or etc., is that subcontractor going to be able to complete the job? Will they still be here in a month's time? So there's going to be a huge amount of uncertainty. We've got the moratorium on insolvent trading finishing, guesstimate around the 23rd, approximately of September, being 6 months from the date the legislation was moved. What is that going to mean to people? We're going to be able to, creditors will have the ability to file for winding up applications, etc. And our business is going to be solvent post-September, and what arrangements have people put in place to confirm that they are solvent? And that works both ways. One is whether or not you're trading while insolvent, but the other part of it is, are you receiving a payment from someone who is insolvent, and as such, if they do go into liquidation, are you ultimately going to be sued for preference by a liquidator? So the only thing we can do is look at a controlled approach to moving forward, which is what we've set out in today's seminar. We've identified the 7 key areas that we believe people should be looking at. We should be looking at premises, the financial side of things, employees, legal and compliance, customers, suppliers, and management. And we'll go into each of those in a little bit more detail. So when we come to premises, there's a large number of issues. I think we've all seen the signage that confronts you when you walk in the door. I know one office that have arrows on the floor now that direct you that you can only walk one way around the office. But there'll be all sorts of different changes. I mean, there'll be maintenance issues, health and safety issues. You'll need to deal with cleaning, hazardous waste, etc. And information packs. How are you going to organise for your employees? How are you going to organise social distancing? How do you educate your staff as to what's allowed and what's not? Alastair and I have entered our office this morning and gone into our breakout room, and we've got a couple of large settees or couches along the wall, and there's a "Do not sit here" sign all the way along it. Now, I don't know whether that means I can't sit there at all or only in the spaces between the signs. So there needs to be clear signage, etc. You need to look at your licenses and certification, check the expiry dates. I mean, one of the issues which will cover both of those is the insurance and the licensing. I saw on the news last night they were talking about allowing cafes and restaurants to utilise outdoor areas to increase the number of patrons. Now, the one thing that they need to think about is, are they licensed to utilise those areas, particularly under their liquor licences? Do their insurance policies cover them for those set out areas in respect of public liability? Then you need to, as I said before, you need to consider your signage and the hygiene practices. You need to think of the timing. How compliant are you? How quickly are the laws changing and the legislation changing? You need to look at your critical building systems to ensure that they're safe, the air conditioning systems safe, the kitchen utilities, all of those sort of staff amenities are safe. Deal with your landlords. Some of them may be prepared to grant concessions. We're currently working with a number of large agents. One of the agents we're dealing with has got 10,000 tenants that they look after, and they've told us that they've had applications from 70% of the tenants looking for some form of rent relief. On the other side of the coin, though, we understand that there hasn't been a great deal of rent relief granted at this stage. So the number of issues that you should be looking at for your premises. Then I'll just hand over to Alastair now. He can talk about the financial considerations, which is probably the major issue that the people will need to deal with moving forward.
So finance, I guess, is the obvious one, in that cash and your available cash and your available finance is what leads to the heart of your position and whether you're going to get through this or not. So it leads to the heart of your resilience. Do you have reserves? Do you have reserves for the unexpected? So really, we're looking at ways that we can maximise the cash flow and the financial headroom available to businesses. And it's going to vary from business to business. It's obviously some businesses will actually be doing very well at this time and are looking for new capital to expand, while other businesses are just trying to stay afloat. And so when assessing this, it really comes down to understanding your particular business that you're assessing for. You need to consider the market and what's changed. Are we playing in the same pool as we were before COVID? Are there fundamental changes to the market which then need to be reflected in our operating model or in the aims the business is headed for? And because we're in this interim phase at the moment, is the way we're operating now consistent with where we're going for the outlook? And all those little changes are going to influence what funding you need and where it's coming from. And so when considering about that, it comes to what if scenarios. How do we consider what is likely to happen for us, or even what is unlikely but possible to happen? And the more that people can plan that in advance and build it into their scenario planning, the more that you have flexibility in order to bring that available. The challenge in trying to do what if scenarios, particularly the more out there ones, is do I have data available that I can actually make or model a realistic scenario for what's going on? Now, one thing that people can control now is spending. As we know, businesses have those fixed overheads that can be hard to change, and you have the discretionary stuff that's often linked more to the actual provision of supply. And so if businesses are looking at what is spending, what is really critical, what has changed to what is now expected as critical or not, and there's things that will drop out of that. There's things that will be added to it because of the new safety concerns. Things like more cleaning, etc., will be added into it.
One of the interesting things, we were going through our own budget yesterday, and we've made a bigger adjustment to the amount of money that the firm's going to be spending on overseas or on conferences, etc. So, you know, that we're seeing that at the moment as something that we can cut back on in a cash shortage environment.
And yet at the same time, you might be spending more on car parking so that staff have an alternative to get away from public transport. And again, it's going to differ from business to business. But the point is to be conscious of that and to include it in your forecasting. Stock control is an interesting one, in that as suppliers change, their environment changes, their cash constraints change, they may well change the order quantities that you need. If they change order quantities, your use of products will also change. You might think about the reorder levels, as well as how much do I need to order when it comes through. And so there's a degree of having to try and predict what the supply and demand is, as well as the timing for those suppliers. Really enter into some discussions with your suppliers early on so that both parties are informed about what is likely. And also you've got to assess if that supplier can't deliver, or you have they may not be financially stable, what are the alternatives? So in negotiating with suppliers, as Andrew pointed out, suppliers may want to put you on COD. The systems you have in place may not allow for that, or may not make that easy. And so again, be aware of what your suppliers are, look at alternatives. And the feedback that comes from them, make sure that that comes into your modelling so that you have realistic timeframes as well as realistic quantities when you're looking at purchasing. All of that needs to come into analytics. We're effectively talking about how to analyse the business. And so it's important to try and gain insight into the business. And obviously the focus at the moment is on maximising the cash flow and the profit. In a sense, we're not talking about accounting profit, we're talking about a cash profit here though, and making sure that you have enough resources to keep the business going and hopefully to thrive. When we're looking at the analysis, there's no point doing analysis that's retrospective looking back 3 months. We're in a changing environment, so the analysis needs to be very timely. You need to be making sure that the analysis can be done relatively easily, so integration with systems, and that the outputs are usable. When thinking about what the constraints are for the business in achieving what's out there, there's obviously a lot of schemes out there from the government at the moment. The JobKeeper is the one that's getting lots of news, but there are other new schemes, and schemes are being announced all the time. Make sure you stay on top of what they are and what's available to you. And look, the BDO's COVID website has had good feedback. It keeps abreast of these sorts of things and keeps people amused, but make sure you, keeps people informed, but make sure that you're staying abreast because there are new schemes being announced. Even last week, a couple more schemes came out. In looking at it, if you can see that you've got the need, some businesses will have higher demand or will need to reposition their business. Where is the funding coming from for that additional working capital and facilities? And obviously part of this is going to be approaching lenders to talk about what is required, what are options, can we change payment terms, are further facilities available? And look, there will be some people out there that can take advantage of their insurance policies, but it's going to be in the fine print. As I was talking before, the ability to model what's going on is important. And really it comes down to the ability to anticipate what things are, to plan some scenarios and to check it. And we do find that a good model will have more than one scenario, particularly in the current environment. The model itself should be robust and flexible. And what we mean there is that the model needs to be easily maintainable. If one person is spending all their time doing nothing but modelling and it's always late in what it's output, then it's not really an effective model. It's the balance between accuracy and timeliness and clarity that's really important. And so it should be a maintainable model which is integrated with your systems as best as it can be, and that allows you to check different sensitivities. And so what we're talking about here really is a dynamic model that incorporates a number of assumptions. And models can very quickly get out of hand in size, and so it's important to be very clear about what drives the business and what drives the model. So where you have assumptions, you want to make sure that the assumptions are clearly documented and that they are integrated in the model's calculations, not buried in code somewhere, so that if someone goes and changes and all of a sudden your reorder quantity's gone from 1,000 units to 5,000 units, you can make that change and see the impact. Also, it's important to consider one-off payments. You might have balloons on expiring facilities. You may have rearranged entered an arrangement with a supplier or a landlord to defer payments. it's important to make sure that those large volume payments are captured. Otherwise, the cash position can very quickly get off. And also, you've got to remember that with these things, where things are deferred, they are deferred in most cases, not forgiven. And so where a liability or a payment is deferred, make sure you're capturing that down the track. The other thing, I guess, is just quickly on that to be a realistic model. So we'd say when you're talking about the inflows, be conservative on both the quantity and the timing. And when you're looking at outflows, be very realistic or maybe a bit more pessimistic on, again, the quantity and timing of those flows. So again, as I alluded to before, with the model, you want to make the integrations the best you can. It just makes it easier to do the model. We would always recommend a three-way model because profit can be a very different picture to what the cash movements are. And so that three-way model that picks up both the profit and loss, the cash flow, and the balance sheet is very important. Where you set out all the assumptions clearly in the model, it should make scenario planning easier, which is obviously very useful in the current environment where things are changing constantly. And again, when you're thinking about the drivers for the business, think about what's actually changed in the underlying business. Are there fundamental changes? Are there short-term changes? Are they timing issues? Think about all the factors that are driving the business and that have changed in the business, and make sure that your model is actually reflecting that, because some of the fundamentals we've taken for granted have changed in recent months. Once the model itself is organised, you want to make sure that the outputs are flexible, they're useful. You might be looking at a 1 month view, you might be looking at where are we going for the next year. But similarly for the businesses, particularly where cash is tight, it might be needing to do a weekly forecast. Now, the shorter the time frame, the more lumpy it can become, and the more critical the accuracy is as to what's going on. But depending on the situation for the business, the tighter cash is, or the more you're trying to assess a particular scenario, the need for greater detail and attention. Once you have the model there and it's in place, test it and validate it. So if you forecast last month's results and you now have them, check it. What are the variances? If the variances that are above 5%, 10%, whatever threshold you set, why do those variances exist? Have you made a mistake in the assumptions? It has something changed in the business that wasn't forecast. Understand why there are changes so you can bring those into your thinking for the management as to how to shape the business going forward. We're talking here, best place methodology really is just making sure that things are done consistently, it's clear and it's accurate. Also, when forecasting, you can use specialist tools. There are things such as castaway forecasting. It'll handle all the flows between profit and loss, balance sheet, and cash flows. The downside of a program like that is that some users may not be as familiar, or stakeholders may not be as familiar with the outputs, whereas something like Excel, people tend to be more familiar with if they're reviewing the detail. When you're considering the presentation of the outputs, you do need to think the detail. Some people are high-level decision makers. They just want to know how they're going overall. They don't need to see all the details. Other people are needing to understand why there are changes. They will need the detail. So that ability to have flexibility means you're more likely to get engagement out of the users for that model. And as we said, just remember the flow-on impact of deferrals and those sorts of things. Ultimately, you have to pay to cash out at some point down the track. The employees probably touches the base on a few of the same sort of ideas that Andrew was, as far as the challenges of getting people back to work. There's a lot of planning that's going to go into this for businesses, particularly that have gone through a heavy shutdown or heavy restrictions. And really, the focus here is to make sure the business is not overwhelmed, and it is to guarantee the safety of employees, which we're all very conscious of. And there's obviously now new legislation around what you can and can't do as far as densities and things like that. And look, the virus is going to be transmitted. You'll have to react as things happen. But I guess there are a bunch of guidelines out there now for employees. The employers need to be aware of that. They need to be clearly communicated to employees so that they're aware of it. The timing of bringing people back to work is important. It's not a bad idea to stage it, test how your systems work, test how the infrastructure potentially in the buildings or the areas or the transport work, to make sure that what your assumptions for getting people back to work are actually correct before you go back to full scale. And you've got to look at whether you can go back to full scale given the current restrictions on densities and things like that. Where you're looking at who to bring back, the decision is going to come down to what the focus of the business is. Where you've thought about what people we need, what interaction we need between teams, what interaction we need between advisors. You want to make sure you're bringing back the right people to achieve those purposes. And remember, at all times, you still have the legal requirements of dealing with employees, and so you may need to seek HR advice on what can and can't be done for people coming back. The other issue, I guess, is that things like JobKeeper and even the increases to JobSeeker has meant that some employees aren't actually keen to come back into workplaces. They've got it quite good at home, particularly those on lower wages may in fact be earning more money than they were before, and so they're not as keen to come back to work. Another challenge that people will face. But when we do work with people coming back, be proactive in your messaging. Make sure you have good, clear communication. Make sure that the changes to policies, changes to procedures are communicated with employees so they know before they get to work, and they're reinforced when they get to work. You might have to look at what skill sets people have. Do things need to be changed? Do we need to make more people upskilled? And so review that in line with what the policies are. And when it comes to policies, are the policies themselves fit for purpose? They may well have changed. As we've seen here, obviously there's more acceptance now for work from home. Travel arrangements will have changed. The employee expenses might change in that you're paying for things that they're using at home rather than at work. As we said, we maybe providing car parks to keep people off public transport to increase the health and safety of those employees. We've all seen changes in the IT environment. Some of them have been really positive. We've looked at systems, we've looked at efficiencies. Work out what worked well. What can we change both for the remote systems and for the local systems that will mean we're working more efficiently into the future? And it is about efficiency. Where people have been working from home or working different hours, have those flexible arrangements actually had an impact on productivity? Is it positive or negative? Take what you can from that to embed good work practices so that we have positive outcomes for the business. And when you're looking at motivating staff, it's worth revisiting your incentive plans and bonuses. Obviously, the goalpost has changed on a number of things. Are our incentive plans and bonuses aligned to the correct, I guess, metrics to start with? And are they aligning it with the firm's or the individual business's current financial goals? So it's worth reconsidering those things. Alrighty, we'll move on to legal compliance, and it looks like a fun topic, so Andrew can discuss that one again.
Well, we've seen a lot of legislation on the run over the last six to 8 weeks, designed to keep businesses trading. I guess anybody opening the doors again is going to have to look at their contractual arrangements, how they've been impacted, particularly in the building industry, or anything where you've got a time frame in which to provide a service and there are liquidated damages. So you really need to consider who's going to bear those risks, and I guess you're also going to have to look at what risk or what exposure you have should your subcontractors who work with you fail, and as such you then become responsible for liquidated damages. So we really need to look at the contracts, and in most cases you may need to renegotiate those contracts for the principals, sit down and discuss the uncertainty of the workforce moving forward and get some allowances to deal with those uncertainties. Consider entering into new contracts at the moment. I mean, it's pretty, the difficulty here is particularly if you're dependent upon overseas supplies. It's an unknown. We just don't know the security or the risks involved in getting supplies, so it's very hard to commit in a new contract. Need to be prepared for job losses, particularly contracts of employment, and understanding what your obligations are going to be, because it's likely that a number of workforces will have to downsize. Look at business interruption insurance. To date, I don't know that we've had any clients that have been successful with this at this stage, but it's certainly worthwhile talking to your broker and your insurers to determine whether there's any relief there.
And also on that side, you can look at, given the changed environment, have insurers change their policies that you could look at it for future coverage as opposed to backward looking.
We've got some temporary relief from landlords. As I said earlier, that our experience has been that a majority of landlords haven't provided a great deal of relief. The legislation sets out under what terms you're entitled to that relief, and what we're finding is a lot of people are unable to provide the information necessary. At the moment, it should be if you're under $50 million and able to access JobKeeper, then you should be able to get that relief. One of the engagements we have is working with a number of agents now to put together a monitoring tool to be able to get a snapshot of where their tenants currently stand in respect of their ability to trade on and meet the rent in the future. There's no point giving a rent relief to someone who's only going to be around for 6 weeks. You may as well get on with it and discuss the hard reality, have that hard conversation as to where you're going and moving forward. There's been changes in the audit filing deadlines for unlisted entities. One additional month for balance dates from 31 December to 7 July. Listed entities, an additional month to report for the full year and half-year financial results. So that's going to change a number of things. I mean, particularly financiers who have covenants in respect of the provision of financial statements, etc. They've got to understand that there have been changes, and as a client, I guess you need to make your financiers and your stakeholders aware of those and keep them informed as to how and when you think you're going to be able to provide the information, notwithstanding you've got that relief. We've all seen the changes to the insolvency laws, giving companies some additional breathing space. You've got the increase in the threshold of the statutory demand. You've got relief from directors on personal liability from trading while insolvent, increasing the time for debtors to respond to notices, etc., etc. From what we've seen, this will come to an end. A lot of particularly the director personal liability issue, will come to an end at the end of September. So, what happens post September? If you're a business owner and you've been relying upon this moratorium on insolvent trading, the 1st of October, are you then personally liable for the debts that you incur? So you really need to think through what your own financial position is. And a lot of people need to understand that, insolvent trading is incurring a debt incurring a debt that you can't pay as and when it falls due. So they need to understand that if you make arrangements with your creditors, that changes those terms. So you might have had an account that's 30 days and during this COVID period, you've been unable to pay it. But if you reach an agreement with that supplier that over the next 6 months you'll pay that, then provided you maintain those payments, you're not then in an insolvent position. So the advice to us, and we go into it a bit later on, is to make sure you document these arrangements. You really need to be planning now to see what your financial position is. On the other hand, you need to also look from the recipient side of things, that all the way through this, you've got, whilst directors have a moratorium on personal liability, you as a recipient of payments, it's going to be pretty hard to argue that you weren't aware of a potential insolvency of a client who has paid their bill. And therefore, you need to obtain reassurances from those clients that they are financial. This is a brave new world. I don't know what the courts are going to accept as justification, but I think at least if you were to be in communication with your clients and had reassurances from your clients that they were well prepared, they were planning, they are solvent at the time they make the payment. The only other alternative that is going to be requiring cash on delivery, which is going to be a little bit hard for some businesses. Customers, as I said, they're going to be another issue. Those customers are going to be facing the same issues that business owners have been. They're all in the same boat. So there's going to be a large change to demand and how customers operate. The only thing that we can stress there is that you need to engage with your major customers, understand what they're doing, understand how they see their uptake of business is going to be, what deadlines they're going to have, etc., etc. You also need to ensure that the quality of your goods and services meet the needs of those people. Do you have product that is now out of date, that's been sitting in your warehouse for 6 weeks? Ensuring that those aren't the first stock that you push out the door, or they are the first stock that you push out the door, but your clients understand that there is a limited time frame for them. You need to understand, by engaging with your customers, the demand that they're going to have and build their plan moving forward into your plan, so you can prioritise those customers that have demand, and you can allocate the appropriate resources to them. So, and also, I guess the basic obvious things for most people is to identify those high margin transactions which are going to bring cash to the business as quickly as possible. The one thing about customers, though, is that you really need to, and we as at BDO have also, we've had to have a look at this ourselves. Moving forward, hoping that everybody goes back into business, we need to ensure that we don't continue to expose ourselves to a credit risk. We need to ensure that, everybody wants to help everybody else and be generous, etc. But at the end of the day, you can't allow customers to run up large accounts without some certainty that you're going to get paid. So, there are a number of people who are looking for cash up front. You need to go back and look at your own credit terms. You need to ensure whether or not you've got retention of title clauses built into your terms of trade, whether you've got any personal guarantees. You'd be surprised the number of people that we come across who do have retention of title clauses in their documentation, but they haven't registered those securities on the PPSR register, which means that those clauses are invalid these days. So, people really need to be looking at those, their trading terms to ensure that they have the maximum amount of protection. Once again, you need to look at your contracts for your timing clauses, understand what the liquidated damages clauses are, and engage with your clients to make sure that you're all on the same page. You need to review those contracts for supply of goods and services, see whether they're able to continue to meet your requirements. You need to review your market, see whether you're being competitive. You may have to even change the way you go to market. You may have to put in special offers or discounts to encourage people to buy from you as opposed to everybody else, because everybody will be trying to buy that market share and take opportunities where they are. I mean, even as a firm, we've had a number of opportunities presented to us to obtain new clients purely because of the pace that we've responded to some of the COVID incentives, and other people haven't done that. So you don't want to be in that position where you're behind the game in respect of providing service to your clients and losing those clients to your competitors. You need to look at the threats or opportunities of online, which is seen to be king these days. I mean, sitting in my home office, looking out the window at my road, the only vehicle that I see go up and down the road each day is the courier van, and it would go up and down our street probably 10 or 15 times a day, dropping things off. So certainly online offerings are the boom. Uber Eats, the food industry, every restaurant. So I see that I can even go to some of the 5-star restaurants around town and order a steak and have it delivered. I still have to cook it, but they're being entrepreneurial, which is great. Understand that cash is going to be scarce, and you need to work with your clients as to how you're going to deal with that, because some people just will not have the cash to be able to pay COD. So we need, and as I said before, if you are accepting cash, you do need to get some comfort from people as to whether or not they are solvent. It's certainly all right to accept cash for consideration at the time, but if you start obtaining payment of outstanding accounts at the same time, then you are exposing yourself to potential preferential actions at a later time. I think we're all aware that travel is going to be a slow, progressive introduction. I mean, I see Pauline's going to the High Court at the moment to reopen our borders, but my personal view is that even if we reopen the borders, I mean, how quickly is travel going to happen? I mean, who's going to get on a plane and fly up to North Queensland? I think people might start going to caravan parks and driving individually, but we need to understand that people are going to be reluctant to travel. So we need to work out how that impacts my business, but we also need to work out the digital solutions to work out how I can deal with those clients and deal with them face to face using a digital solution. I know that a number of our auditors are struggling. Most of our audit work is being done through a digital solution, but they are all eager to get out to their clients' premises to complete the work that they need to do. You need to understand your customers' obligations. You need to understand their delivery schedules, supply contracts, understand what clauses they've got to terminate contracts or amend the terms of the contracts. and what mechanisms are available for delays, etc., etc. Once again, we then go from that position to the suppliers. We have touched on a number of these points already, but to reiterate, the supply chain is going to be king. Understanding who is still in a position to supply you with what you need when you need it. So you really need to work through your supply chain and understand the critical issues. And you may need to consider tier 2 or tier 3 suppliers. You may need to understand who's prepared to provide you with terms as opposed to COD. So it will be a complete change and a complete reassessment of your supply chain, particularly if you're dependent upon supplies, etc., coming from over the border or particularly overseas. You know, I know that the transport industry is booming at the moment, primarily because air freight is no longer available. So all of that freight that was used to be flown is now on a truck somewhere. So you would need to make sure that you have provisions in case the supply chain fails. How do you deal with the demand that you have? You need to look at the reliance on key suppliers. What are those risks? What are their capacities to supply, etc. So they're very important. You may need to consider redesigning your products to meet the new market, and in which case, how does that going to impact upon your suppliers? You may, whether you've got long-term supply contracts, how do you change those contracts? You need to, as Alice has said, you're going to have some punt or some guess of what the demand's going to be, and try to plan your supply scenarios based on what you consider the demand to be. It may be a case that you need to pool resources. You may need to talk to some of your competitors and work out how you can work together to maintain supplies.
Or those for resources, it might be that you have an organisation that's based throughout the country or even overseas. Have they got the resources you need? They have the particular product that you can source from them rather than from an external supplier. Okay, moving on to management and leadership. Obviously at this time, management and leadership of people is key. Not only are we tested in dealing with our own staff and internal teams, there's crisis planning, there's future, there's reshaping businesses and working out where we go. And the decisions that we make now on how to adapt a business, how to reposition a business, is really potentially going to set you up for your future, for your success in the future. And there's lots of sort of research to show that moving quickly and getting it right can set you up for success in the future versus your competitors. And so in doing it, we need to consider the structures that we're using for it. We make sure that it's collaborative, and the collaboration is really important, particularly in larger organizations or in multifaceted organizations. If we're working in silos, then people may be coming to completely different conclusions. We need to make sure that there's people from all areas invested in the decision-making process, so that the correct information is coming in and it's being passed out again. And it's one of those things where at the moment, I guess that the challenge for a lot of people is this return to work. And it's the same scenario when we go through and think about the things that are required to work out the return to work. Have a team lead it. You know, where you have multiple organisations, multiple sections to an organisation, you want the input from those different areas. They'll know the subtleties of how their teams work and the requirements and what their focuses are. Where you have people involved across the organisation, that return to work team, you've got the best chance of actually getting the right message to the right people. And again, we keep speaking about it, but scenario planning. Chances are that budget you did back in May of last year for coming out to the time now, it's well and truly gone. Maybe the revised budget that was done at the beginning of the year in January, again, no longer relevant. So make sure that your budgeting and your planning is up to date, so that when people come back, they know what their goals are and where they're heading for it. When we move on, there are a whole bunch of different, I guess, key things that leadership need to think about. COVID has had a lot of impacts on business, which are, they could be a shock for short term. Things like hospitality is that they've had to close their doors, which is a shock. But will there be fundamental changes around the densities they're allowed to have, for example? Will it mean that the fit out is no longer up to date or appropriate for going forward? Are there changes? There will be a whole raft of changes depending on the industry as to what's there. So you need to think about what's been a shock to business versus fundamental change and how you adapt to those.
A perfect example of that is hot desking. Hot desking, which has been the talk of the town for the last couple of years, is now you're not allowed to hot desk. And I think one of the interesting statistics that we've had from our client base is that the number of sick days has dropped dramatically through social distancing. So is it going to be a case that companies will be taking more floor space and continuing with more area around people, which will have ultimately a result of reducing the number of sick days, not just from COVID, but from flu, from any sort of gastric, et cetera, a lot of the things that we're doing now will continue to have a benefit in the future. So is that going to be a fundamental change to the way we look at floor plans?
Yeah. And look, the challenge here is that there are so many small things that are coming into impact as well as the majors that need to be considered. And so having strong management, strong leadership to bring it together, and then having robust systems such as the forecasting we're speaking about, where we can test ideas, we can scenario plan, we can actually use it. The idea is that the management and leadership is generating ideas, is driving direction, but we need the fundamentals in the background to make sure we can test these things, make sure they work. So we can test that. We can test the impact of things on cash and different planning as well. And when we're looking at it, it is a time where people will have to make decisive actions. You might have to make a key action to get on with something or to stop something. And they're decisions which may have taken longer in the past, but because of limited cash and changing environment, you'll have to make fast moves. And look, we talk about no regret moves. It may just be that you have to make it and get on with the decision and live with it. But where you can plan that in advance is great. The other part, I guess, at the moment is that there will be a different change in risk appetite and in understanding what the flexibility of an organisation is to change. We're also looking at what the ability is to understand your minimums, understand what your underlying costs are that you can't change, understand what the profits you need to make to generate that, to cover those costs, so that you understand what the downside of all this is. And then when you have the leadership coming together, make sure they're getting the right information across the organisation to make the correct decision. And once you've made those decisions and put them in place, you've got to monitor it. Have you made the right decision? Are we doing the right thing? What's changed? And without continual monitoring, it could well be that a plan you put in place 2 weeks ago is no longer valid because of changes in either the market or in staff or in legislation. There's a whole range of things that will impact it. And so management and leadership, unfortunately, are at a time where the pressure's on them. They have to keep on top of what's going on, keep constantly monitoring what's happening, and then reacting to that in the most calculated way they can. And so when they've made those decisions, they're monitoring it, make sure it's communicated to all stakeholders. Again, it may be internal, it may be external. Make sure that when you're communicating with staff, it's an appropriate level of detail, an appropriate level, or to stakeholders in general, it's appropriate level of detail, and you're getting the key messages through that those people need to understand. And the idea is that you want to align the responses to the purpose, get everyone on the same page so that you know where it's going. In all of this, there's time and there's cost and there's money, so make sure that the cash is understood. Where you have new projects coming up, consider the timing for it. Where can we generate cash now as far as divesting assets, those sorts of things. And so, again, while there's lots of changes and decisions, the best you can test that with forecasting, etc., to make sure you understand the cash position. So that three-way forecasting concept, again, is very important. And where you're forecasting, the focus, I guess, for management needs to be on that profit and cash side of things. And to override all this, where you need the working capital, you're back to then wondering where does it come from, and making those decisions around how to fund. Okay, Andrew.
All right, I guess just to cap off our discussion today, the basics that we see, and we've sort of repeating ourselves a little bit here, but number one, you have to prepare a conservative weekly cash flow based on the gradual return to pre-COVID business revenues. You need to consider the fundamental changes that have happened in your industry and your business. You need to work out what your working capital requirements is going to be. You then need to work out if you need working capital, where is it going to come from? Is it going to be debt or is it going to be equity? What is the debt capacity of the business? How much debt can it carry? What security can the business offer? This is the hard conversation that you have to have. I mean, a number of our clients have talked about this and talked about going to the banks and getting borrowings. And, the only way they're going to borrow those funds is to put the family home up as security. Now, really, they have to have a hard think about that. We had a chain of coffee shops talk to us very early on in this process. And we had to sit down with them and say, look, you're going to go and borrow against all your personal assets. and you don't know what the picture looks like at the far end. So it's, in some cases, people need to make the decision. They need to make sure they talk to their wives, their families, their husbands, whatever, and make sure that you are really prepared to risk what you've got. There may be other alternatives. The big one that we've been talking to our other partners about is, if you are providing finance to the business through your personal assets, make sure you put in place the appropriate documentation. A number of times, we always see on the balance sheet directors' loans, there's no formal documentation, there's no details of the security, and directors often feel that they're embarrassed or it's inappropriate for them to take security against their own business. I mean, in our view, there's no reason why you shouldn't. If you go and borrow $1 million against your house and put it into your business, then you should be taking out a proper loan document and registering your security against the house, against the business assets, sorry. Now, it may be after the bank or other finances you've got there, but there's no reason why you shouldn't have that opportunity. Most of the trade terms that you enter into give suppliers a caveatable interest in your property. So why don't you take that initiative and make sure that's in place? As we've said, post September, it's a really hard question. Can you pay your debts as and when you fall due? You really need to make sure you document your arrangements. You need to be able to sit down and don't say, oh yeah, well, I had a deal with him, I could pay it off over 6 months. Get it in writing. Get the position in writing. It's very hard to create these documents in hindsight. Should eventually you be unable to continue to trade, a liquidator is appointed, and you can't substantiate that you were trading while solvent. So it's a matter of sitting down and documenting what arrangements you have. As I said before, you need to make that hard decision. Should the business continue? I mean, I don't think it's any embarrassment to anybody under these conditions, should you decide to close up shop. It may be a case that there's a far better option, but maybe there are other alternatives. You should consider potentially a formal restructure to rectify the negative asset position or a safe harbour position. I mean, it'll be interesting to see the Virgin administration play out, whether or not that was really simply a voluntary administration to restructure the balance sheet. And I think there's a number of parties looking at that and looking at the opportunity. I mean, COVID's been a great opportunity for people to go into administration without the stigma of being financial or poor management, or that you're not going to be able to supply in the future, but simply blaming COVID and the downturn in cash flow, making that decision to go into administration, to come out and use that as a restructure of the balance sheet. But as I said, safe harbour is an important one. I would strongly suggest that people who have concerns should be planning safe harbour prior to September. So when September comes past, they are in a position, they have a plan, they're well protected in respect of continuing to trade. So that's about all we have for you today. If there are any questions, I think you can type those through on your screen. And next week, I'd like you all to stay tuned, because Todd Kelly and Ben from our Cairns office are going to be presenting on the ground account of what organisations in Cairns and surrounding are doing. Todd recently provided an update to a number of his contacts on the general environment. They certainly have a first-hand view of what's happening in Port Douglas, etc. So please stay tuned for that. And the other comment I have is please have a look at the COVID-19 BDO web page. There's a whole lot of resources in there to assist you with looking at what incentives are available, what the state and federal governments are doing, or even local governments are doing, and particularly what financiers are offering to assist through this period.
And we'll put a link to that in the slides.
Yeah. So if you have any questions, please feel free to type them through. If you think of them later on, please don't hesitate to send them through to Alistair or I at a later date. But otherwise, thank you very much for joining us for today's webinar.